Welcome to today's tutorial brought to you by To The Tick, and today we're going to look at some real data on the head and shoulders patterns, both the tops and the bottoms. Now you will find on the website, you will find a video as well as a full text description and chart examples on the head and shoulders tops and another sequence on the head and shoulders bottoms. But those are classic textbook examples of what the patterns should be like, and I thought it was important that we really look at some live charts and explain some of those charts that I've put on there, because I haven't put classic definition chart examples on there for you. So we're going to look at a couple of these. These ideally are large patterns, head and shoulders. They have the potential to offer a great big return by signaling a change of trend as a big reverse, and we can see them in smaller time frames in markets and instruments that are volatile and less volatile instruments. They're common. In other words, they're fairly easy to see, and they're a trader favorite because they are somewhat structured in their design, but they can have a lot of nuances, and we don't want to miss out on trading them just because they're not always picture perfect. So again, you can go over to the website and get more detailed material on there individually. So right now we're going to go through it very quickly about what the textbook classic definition of our head and shoulders top and then our head and shoulders bottom, and we're going to look at some charts. Okay, so first understand we must have a trending action in the background before we ever talk about a reverse. In the case of a head and shoulders top, we've been trending bullishly. We look for that first swing high, first swing low that establishes our reverse box. Initially, this is still a very bullish trend continuation picture, and we would look to join the trending party on this swing low to go long. It becomes a reverse, a double top, a triple top, a head and shoulders, multiple other patterns once it makes several efforts on the top. So with this first swing high, first swing low, all we really know is we've run out of gas, and it's been a big enough difference to change the pattern to pique our interest. That's about you and your money and your instrument. Everything that happens next for the pattern unfolds about whether you can see the exchange of hands, that duel between buyers and sellers that goes on up and over and up and over and up and around this muddy trench. It establishes where they were willing to come out of long shares. If you're going to have any kind of reverse, it's got to happen in here. They've got to come out of long shares and to be developing a position to go short. You can see it. They can't hide. But you get to establish clear lines here, and some of the nuances come from what happens inside the box moving forward. The definition of a head and shoulders top as a reverse does not confirm as a pattern until the breakdown has cleared and everybody else knows that it's a breakdown. The essence, like I said, of what comes next and the nuances, whether it creates a top, a double top, a third effort, or second effort, it's how many times do you see them back and forth, vying for holding rights, if you will, in that muddy trench. Who owns the scrimmage line? And basically, if the bears decide to take over and you get a breakdown, then your pattern confirms. Now, the flip side of this, the head and shoulders bottom, is with a downtrending price action, but it's the same pattern. We look for that first swing low, first swing high, establish our box. If we're going to have a reversal, and if this pattern interruption of this trending action is big enough for you to catch your interest, then you're welcome to try to trade the box. Use those muddy trenches as an interim measurement to help you target. If you don't get your side of the line to push really hard on that muddy trench, use it at a spot to say, I better take some profits. We're not getting through it. Think about it like a muddy trench and a real battleground in there, and you want to stay out of there as far as initiating trades unless and until you get a clear signal that somebody's gotten control. You know, the big pull on the tug. That's the tug of war. But it's the box and the concept of not knowing what happens on the number 2 efforts and or whether we can get a number 3 effort. And that's what support and resistance is all about. Quite often the market does respond to a third effort, and it's what gives us a lot of our reversal patterns take those 3 efforts. But again, these classic textbook definitions meant that everything was very nice and symmetrical. You could put it into a nice rectangle. Everybody had the same number of bars between left shoulder, right shoulder, and their head. Well, it doesn't always look that good. If you're gonna have a reverse, you had to have the trending action to set it up. And then to have that reverse, you're looking for it changing hands and the battleground and who's holding what to change. And you're going to see it in the muddy trench. The extremes on either side of your swings are tradable if the box is big enough for you. Realize that in both of these patterns, the trend is still firmly in control until the pattern actually breaks out or breaks down and it confirms going in that new path. Okay, but the boxes are the same regardless, top or bottom. Once you understand this concept, then all the nuances won't look so weird to you. So here's a classic head and shoulders top example that I gave you on the website, and it's not classic from the standpoint that it's really textbook because we get 2 little boxes. They're not content with this left side, but ultimately the left side where there was all that resistance and your volume slowed to a crawl, that area ends up being your left shoulder in the bigger picture. So this is your first nuance. First of all, don't ever be looking at the picture to being done and out of it until you firmly break a bigger line. In this case, a bigger support line needed to get broken or you were right back up here into the same pattern again. Now you look at it and you step out of that immediate little bitty forest and come back and look at the great big picture, and it's really clear to see where this shoulder is. It's also really clear that when it broke here, no volume in this buy up, and there's very clear messages out of your volume. So I have marked some of these charts really thoroughly for you to come in and learn the structure of the dual. Learn what's going on between the buyers and sellers in these patterns. This pattern went on for an incredible amount of money short. You need to know what it looks like when it's in its small setups even in order to be able to see it unfold. It doesn't give up easily. Okay, they don't give up easily. Now you'll also note that because we have the 2 different boxes, 2 different areas, which box is of a size that you're willing to trade, it also means that we have 2 different muddy trench definitions. Okay, we have a gap element between boxes. You never got a chance to trade that little gray blue box up there on the top again. Once it broke down, never had a chance. But did you get a chance down here? Was it worth it? Well, was there enough money in it from here to there? Is it just the bigger box broken maybe into 2 or 3 pieces? Think about it. How much money was in each piece? Are you interested once it actually does something? Once it comes up to that red dotted line, could you take that short trade into resistance? Each buying sequence got hit and got smashed hard with some sellers. They were not going to let that price get back above, and that ended up being the muddy trench. It's the initial left shoulder to the pattern. Left shoulders of the patterns are very important, and the more battleground and the more volume you can see in your background that came out, the better. Did they thrust here on the top and then leave it hanging? There's lots and lots of clues. The way that this group gapped through several different important areas is important. And when the sellers got the control, what did they do with it? Come and learn from the charts I've marked. One other little nuance, I like giving myself these reverse rectangle boxes, I call them, but we also have another little helpful tool called creating your neckline. Now the necklines come in when you start getting your channel work, where you're looking for that swing activity from the last swing low, where was that swing low that broke down? So in this case, you'd have a neckline here at this breakdown, and then you'd also have a neckline created here for this breakdown, and it gives you a little room to play with on the targeting side between definition of when does the reverse confirm. On that angle at the breakdown, or do you like the boxes? And in this case, it's exactly the same number. In this case, the breakdown in the neckline was much higher than where the box line was looking at your background information. They gap through it. Nuances of the picture, they all work. Now we've looked at a chart that I've marked up for you, and please, I'm encouraging you, I mark it and spend my time to do it so that you'll learn and have tools to learn. And here's one that's unmarked. Now, right away, immediately, you can see that this pattern is a beautiful turn. You can see that it's a beautiful head and shoulders. At what point and which shoulders do you count? At what point do you decide that it really is a reverse? When does it become a reverse to you? When is it large enough to capture your interest? Okay? And especially when you're looking at risking your money. What you're going to be risking on any of these is that head top. What about when it has numerous left shoulders, just sorta keeps making its way higher, sorta breaks down, but then sorta comes back up? What do you do about these? And you will see numerous types of patterns inside patterns. This will look like a squeeze to you in a symmetrical triangle. Fine. Each part of the component still has a bigger picture that you're going for. And this is yet a third market now that I've shown you. 3 different markets, different time frames, different instruments. So let's go back to one that I marked, and here's one again with multiple shoulders on both sides. Took an incredible amount of patience. Volume just absolutely died on the top. And again, you've got multiple little left-right pictures here that you can use. Where do you draw your lines? It's an art form. This pattern where the X is marked at the lowest low price here, where that X marked on your inset here shows you just how much power that setup really had. Tremendous amount of money. And learning what they look like in the smaller time frames, for you that might be 5 minutes, a day, a week might be a small time frame for you. For other people, small time frame, it might be 25 ticks on a chart. It's about recognizing the patterns. So let's go forward here. Look at this one. Is it a double top? Well, no, technically that's a higher high. Somebody that wants to say symmetry, yes, it's a great big M, but then what do you do with this? Do you trade this as a shoulder? Just because it was a double top once, does it mean it can't now be a 3-part pattern in its reversal? Quite often, if you've had a nice double off of resistance, look for that third effort to either not make it back there, but show you some drama and then run out of gas without a continuous amount of buyers that was going nowhere. Multiple instruments, different time frames, mixing it up for you a little bit. Another big picture with a big old neckline breakdown. Where's the box? Where's the neckline? Where are the nuances? It's not perfect. Look at how much time was created working that top area and then how quickly it let go. And there they are, right back up there again with a great big single spiky bar in that chart to turn down and just offer tons of money in a hurry. Big old right shoulder. Circus tops. What about this one? Highly volatile market. Big old circus top, thrust, dip action, thrust. Okay? Learn the markets you trade in. It's the biggest tip I can give you about some of these, and this is exactly the issue. Here's a nice head and shoulders bottom offered on the website for you to review. Again, marked, with lots of details for you to learn the duel going on. If you understand what's happening on the exchange of hands and realize that this was a big reverse, they hit the reverse and they pulled back into an area of support. On that little inset chart, I've highlighted it, circled it in red for you. This was your picture in your big reference chart. How much strength do you have and your conviction to possibly be looking at this trade for a double bottom? This was a double head. This one had an exact double head, and it didn't stay with the pattern. It broke through that upper resistance, and now your neckline's running the wrong way. Do you chase it? Is it a false breakout? Well, the person that took that head thinks it's a false breakout because they wanted it to go on with it. But did you get a chance to see that it was rolling back down in? Where really is the resistance? And really, ultimately, isn't the bigger picture the orange line? This pattern went for huge amounts of money after they broke that orange line. The big boys, the elephants, didn't really step in with any size until after you completely cleared the red box here, and you started working this box before you got any real volume. So again, sometimes it's not about saying, okay, big volume versus little volume. It's about who's in control at the time. Even if it's 1,000 shares at a time, but depending on what you're trading is what you need to make your references points with. Okay, another marked bottom, multiple necklines. What about when they gap through it? This is what I call a dump and run, and we'll have a definition of it on the website for what the dump and run is about. But it's ultimately pushing with everything they've got left in order to scoop all the shares they can get right back down into that muddy trench of control, all established very early in the pattern from that very first side getting hit and seen and seen and seen and seen in your muddy trench, and that's where the battleground was. The control taken there went on for big money long. Again, you got another option, a little bigger price point, ascending triangle, squeezed to the push and got more money going long. More patterns, again, completely different instrument, completely different time frames, multiple left shoulders. Where is that left shoulder? The box, little bigger picture. And again, can you feel more confident if this is coming back into an area that's already been supported several times? Can you see who gets the control? Very clear who gets control here. And yet the bigger breakout doesn't happen until that final resistance, and then you're off and running. Those elephants can't hide. The symmetry of your instruments and what they do on the left side in a stair-stepping fashion all the way down, they'll do the same stair-stepping fashion on the way up. Again, different instrument, different time frame. Watch the volume and how it dwindles down into the pattern. Once they come into those pause areas, you'll see some thrusting action on the extremes, and that's what you want. These head and shoulders, both top and bottom patterns, must have a trending background or you're not even thinking about a reversal. And the trends rule. So typically that first swing in particular sets up a beautiful trend continuation trade, whichever direction you're going in. Think about it, if your reverse box is big enough, that's a prime candidate for that really strong, what I call jump on that trend trade. But make them give you a 1-to-1, start keeping score. 1-to-1, 2-to-2. How many efforts do I get? Remember the number 3. Establish that muddy trench early. We're looking for the targets on all of these reverses to be a repeat of your swing high to swing low. And yes, you are welcome to include that head, that extra measurement there, into the pattern for that extra juice in that target. We're looking for big targets. The larger your reference chart, the more capable it's going to keep running with it. And that neckline really helps you fine-tune your entries, work the box from the initial concept, and as it keeps building, fine-tune with that neckline to give you those potential breakdowns a little bit earlier and just give you that confidence of where that muddy trench really is. And again, I cannot stress enough, there is real strength in learning your background of who you trade with. So thank you for joining us today. I wanted to look at some charts and real live examples of nuances, because these patterns are so important. And you'll find all this broken down for you on the website at tothetick.com. Thank you for joining us, and I'll see you again soon. Bye for now.